What is up? Good morning. Good morning, everyone. It's the last day of the month. It's January 31st. It's Friday. It's the last day of the week. Everything's coinciding very nicely here. It's the major confluence. So I'm not going to be streaming today. Last day of the month. Last day of the week as well. Generally, we stream on Fridays, the morning session. But this being the last day of the month, kind of an interesting week. I'm just going to leave it alone, and then we'll do a lot of streaming next week, actually. So keep in the loop on our email list, right? You can join our email list when you get into our free Discord at community.tradeproacademy.com. So we're going to have a lot of updates this coming weekend for you guys, inclusive of this actual open mentorship via email. So that's coming up as well. I'm talking about my strategy in itself, as well as actually getting paid out in prop firms, right? Cracking the key, the code, and no, there's no general secret. You probably already know this, but again, a lot of great tips and tricks. Now, so next week we're going to stream a little more, especially in our open Discord, so you might want to go check that out at community.tradeproacademy.com. We'll do some on YouTube as well, and let's dive into this with our updates for today and the expectation for the coming day in terms of the futures market. Yesterday, pre-market, I told our team that we're going up, right? There's no way about it. No, I'm kidding, but no, I did actually, but it's not because of that, right? Jerome Powell took a slightly different take on policy, right? A little policy change coming out of the Fed, which signaled a little more bullishness in my opinion. So a lot of the dips were bought yesterday going into Apple's earnings, and Apple right now is up pretty heavily pre-market here. This is, what is this? We're up almost 4% on Apple pre-market, which is holding up some of this upside momentum. And big tech is not crying as much as it once was, right? You have Google moving into all-time highs as well, but you're still lagging in semis, right? They're getting a little pulled back here. Nvidia's kind of holding things out, and I guess rumors of a tech rotation are coming around. So I think that right now breadth in tech is very weak, where the market continues to sustain a bid with slight policy changes from the Fed that signal a little more dovishness in the upside, which I would anticipate would be a rotation back into tech to start opening up a lot more of that upside. So Apple's quarterly results, right? Largest company in the world. Everyone was waiting out to see what was going on, and so far these shares are up marginally after the bell, after jumping on management's guidance, Before that, right, before the futures closed, before 5 p.m., before we got that call, that Apple earnings call, Apple ran up a bit, but then it started to pull back. But then once that guidance came out, boom, this thing got slapped to the upside. It's up $10. It's almost back to its all-time highs, and it's looking very, very attractive for a potential continuation with, right, of course, the movement back up in tech. Now, earnings came out at $2.40. Revenues came out at $124 billion, topped the $2.36 per share and the $124.13 billion. Did miss estimates by the widest margin since its fiscal 2023 first quarter. iPhone revenue broken down was $69.14 billion, and it was expected at $71.03 billion. Mac revenue $8.99 billion. The estimate was $7.96 billion. iPad revenue was $8.09 billion, while the estimate was $7.32 billion. And other products and revenue were $11.75 billion versus $12.0 billion estimated. The gross margin came out slightly higher, 46.9% versus 46.5%. So Apple and its iPhones being the majority of its revenue, that little beat down by $2 billion, not little at all, nearly $2 billion, I should say, just shy of $2 billion, about $800 million or so. A bit. It's a pretty significant figure realistically. Total revenue did rise 4% year over year, but iPhone growth remains near a flat line, as it has for much of the last few years. And analysts were hoping that its Apple Intelligence integration would be a catalyst for the next major iPhone upgrade cycle, but that hasn't been the case so far. The revenue spike that happened at the beginning of 2021 in iPhone sales and revenue, quarterly revenue, or I guess a percentage of quarterly revenue, has since decreased, kind of flatlining. And still, investors focused on positives Rebounds in other business segments and strength in its high-margin services business helped buoy results as the tech giant develops a solution for its iPhone issue here. It also pays 25 cents per share dividend and bought back $30 billion in shares last quarter to reward investors for sticking with it. So there's generally a bullish sentiment in theory about Apple. It got surprisingly hammered over the I guess to start 2025, it was down about 15%. It looked like a fantastic long opportunity as well, right? Still holding longs on that one. But Trump and tariffs, that's another big topic of conversation going forward here, right? President Donald Trump caused turbulence in certain markets after signaling a 25% tariff in both Canada and Mexico. That's coming on Saturday, February 1st. He's still considering whether to include oil from those countries as a part of the tax, saying that a decision will be based on whether the price of oil charged is quote-unquote fair. The U.S. dollar briefly surged against the Mexican peso and the Canadian dollar, and the stock market of both countries also took a hit on the announcement. Energy commodities in the U.S. caught a bit of a bid, stemming from a 2-week slump. Still, some say that the move could undermine Trump's pledge to lower overall inflation, given that the energy costs are a major factor in the prices of most goods and services. And the U.S. imports over 4 million barrels of oil daily from Canada and over 500,000 from Mexico, producing 13.5 million domestically. It's roughly 20 to 25% of the overall supply faces an import tax, and it could materially impact domestic prices. As for Trump's response, he's not worried about risking any relationships with our partners. He said, we don't need the products that they have. We have all the oil we need. We have all the trees you need, meaning the lumber. Mexico and Canada are in a crosshairs, and Trump is aligning his sights on China. He said that China would pay tariffs for its exporting of chemicals used to make fentanyl, stating a 10% tariff would be on top of the broader tariffs. Now, to go into this, right, a lot of expected move. We're trading, or we're moving in a Trump market right now. Trump is back. And if you guys haven't traded Trump market like we saw earlier on, 2018, 19, 17, right, those years, you're in for a wild ride, right? You can get burned, you can get destroyed, and so just be very, very careful. When he talks, when he tweets, markets will probably move. There's a lot of information, news that comes out, especially when he's doing press conferences, when he's addressing the White House, stuff like that. These are things that you need to be aware of when he's expected to speak, as well as when he's not expected to speak, but does speak. There's going to be movement. A Trump market is a volatile and a fun market, but it can also beat your ass very quickly. Now, crypto, right? Will the magazine indicator crush crypto? Will keep the realistically? I'll keep it kind of